The market only works if you have the policies and the incentives in place. We should have no illusion. The markets are not perfect. I learned this the hard way during the financial crisis. So unless we create the incentives around it, this is not going to work. There is no question in my mind, we cannot avoid the cost related to global warming, to other sustainability issues. We can either kind of absorb it in transitioning the economy, and as you know, that's not easy, and it's costly at some point, or we can do nothing and then we just get hit with the cost in terms of physical manifestation of risk. And so I think what we need to just keep reminding ourselves, and it will become apparent, but unfortunately it takes time, that the cost of not acting will be tremendous. And I put out that number. I still believe that's roughly right. We will lose a quarter of global GDP over the next couple of decades. All of us will see it in disturbing events that will become more and more frequent. And of course, we're seeing that every day across the world. More than 50% of the assets we manage are retirement funds. So these are the funds needed for teachers, policemen, firemen across the world, many in the United States. There's no way we can invest that money into a politically very risky area.
I guess you're caught between the balance of risk of business as usual.
Exactly.
And risk of investing, and there has to become that point at which things tip over. And we talk a lot about the absolute need to make the economics work for a circular economy, and we see that in three areas: the business-led innovation, and we've talked more about more sectorial and regionally, but the business-led innovation. The fact that we need collaboration across value chains, and with plastics, you just heard us mention plastics, you need the entire system to shift in order to solve the plastic pollution problem, and that's massive investment, as you said, in emerging markets. And then that third part, enabling policy. And when you get to that point of saying, the balance tipping between the risk of carrying on as we are and the risk of investing in emerging markets, I imagine that enabling policy is something you look for to try to de-risk to some extent those new investments, which we all know have to happen.
Yeah, 100%. And at the end of the day, it's going to come down to the rich world is going to have to make a decision that it wants this capital to go where it's needed the most. And they'll have to find ways to de-risk these investments. Otherwise, private capital will not flow, right? And I think we need to be clear on one thing. The amount of money involved in moving us to a decarbonized economy, to a circular economy, it's enormous. We should have no illusions this cannot be solved by public money. It has to be the markets, and this has been remarkable about your foundation. You've always put the economics, the markets at the core of it. It won't work without private capital. We have to mobilize private capital. You need two things for that. You need a price incentive, and then you need the policies that induce private actors to actually allocate the money where it needs to go. In a way, that the tragedy of what's happening around inflation, the price shocks, the war, to some extent, as I said, that creates a pretty strong price signal. I mean, if you thought transition to net zero was an economically viable story at $60 a barrel, it's certainly going to look that way at 120. But it's not the only thing. You also need the policies to align. The market only works if you have the policies and the incentives in place. We should have no illusion. The markets are not perfect. I learned this the hard way during the financial crisis. So unless we create the incentives around it, this is not going to work. And the big question is, we are in a moment of crisis in the world. Does that create a moment of opportunity from the policy side? Or are we going to see basically the political side backing off and pursuing other priorities first? And if that happens, then I think we get into a very bad place.
Heading in the right direction, that's one thing we've been talking about a lot here today, is the absolute need for the economy to be the solution provider to many of the world's global problems. And when that happens, that escalates, that becomes a good thing. The more of the economy that works in a circular way, the better. The richer the farmland becomes, the more things are regenerated. And that's a really positive story. And you talk about the need for Europe to accelerate to to stay very much in the game. There's a need for that. It's nice. That's an optimistic story.
It could be an amazing story. Think of the story 30, 40 years ago when the tech sector emerged, right? Today there's one major European tech company left, really, and even that is not really in the top tier. So we have no one playing in the Champions League of technology effectively today. You know, are we going to let that happen again, or is this transition going to be the opportunity where Europe says, no, this time we're going to actually get ahead of this, and we're going to do what Silicon Valley did 40 years ago, and in 40 years' time, the great sustainable companies, the great decarbonization technologies, the great circular economy companies will be based in Europe. That's an enormous opportunity. But we have to move, and you have to align two things: the price signal. So fossil fuel has, in a sense, become much more expensive, which is happening. So that's the one, comfort we can take from the current terrible environment, that, as I said, the green premium has just been compressed massively. And secondly, we need the policy guidelines, in a sense, to be consistently heading in the right direction, so that the manufacturers, I saw you had the CEO of Nestle here earlier, that they are incentivized in the context of operating within a public policy framework to do what they're trying to do. So price and policy, I think, have to align.
We presented the first, let's say, binding EU legislation to restore ecosystems all across the board. And it's actually also, the first of its kind in the world. And we are not talking here about protected areas. We are really talking about bringing biodiversity back everywhere, and actually spatially to the areas where economic activity is taking place. So the agricultural land, the production forests, areas where we fish, our urban ecosystems, our urban infrastructure, because these are the areas where the biodiversity loss has been the biggest. So we are setting, once the law is also adopted by the European co-legislators, binding targets, binding measures that all member states will have to take. And it does not mean that in those areas that will be restored that the economic activity has to stop. It's actually not at all that. It's basically about everything that we have heard today. So if we take agricultural ecosystems, we have to change the way we do things. So agroforestry, using less pesticides, the same in the fisheries area, or when we talk about forests, moving more to uneven age mixed stands, ensuring that there is sufficient quantities of dead wood and so on, because these elements are actually guaranteeing the longer term resilience of these ecosystems also for socio-economic purposes. We also have very specific urban greening targets to really bring back the greenery from trees to roofs and green walls back to the cities, integrate greenery to the urban infrastructure. And maybe I would just say one word about the cost, because what we see according to our rather thorough assessment is that every euro we invest according to this legislation, or that we would be investing, would bring at least 8 euros in return. So we also find that this package is quite important in order to get us finally out of this myth as if nature restoration was, let's say, a cost without return. I mean, it's really the opposite. We are fully dependent on for our well-being on healthy ecosystems, and our economies are fully dependent. So that's why it is kind of part of Europe's growth strategy.
Last time you took part in the foundation event was in Davos 2019, and at the time you said you had counted 130 different plastic policies specifically around the globe. Just to give us a quick stock take, how did that evolve in the meantime, and where are we now?
Thanks very much, Joss, and it's a great pleasure to be here. Shortly after we spoke in Davos, we were hit with COVID-19, and that led to a partial reversal in our attitudes towards single-use plastics. They were literally on our hands and faces for the next 2 years. And so not only did some attention to plastics go off the agenda, our relationship also began to reverse to some extent. But that said, I think there's a new breath of momentum at different levels. I mean, there are talks for global plastics treaty, which are underway now. But even at the national level, there's much more action happening again. So just 5 days ago in India, there's a more expanded ban on single-use plastics that has come into force with many more products which are on the list. And that's clearly a positive development. So these policies, the 130 odd countries we talked about, they were largely talking about taxes or bans on frequently littered single-use items. And the impact cannot be understated because they really led to a shift in public consciousness about the environmental impact of the problem.
We mostly deal with lower income, lower middle income countries, and that's definitely the case. I think most countries are still struggling with the basic elements of the waste management agenda. That is not only true in this set of countries, even in Europe. We know that there are a number of European member states that are still struggling with very high rates of landfilling and very low recycling rates. And I think today I heard a couple of word prices a couple of times. That has partly to do with the fact that there are no ambitious enough policies in order to properly cost waste. Waste very often, wasting does not cost us anything. Landfilling rates in Europe range from 90 to 95 euros in certain countries like Austria and the UK, to 1 to 3 euros in other countries. Certain EU member states do not have a landfilling tax. When putting into the landfill does not cost anything, clearly all the incentives from the start are geared towards that type of action. And that creates an incredible inertia in the system. If today a government or a subnational government, a city, had to enter a contract with a waste management company, that price would remain set over the duration of the entire contract. For 20 years, that would be the price. The company is essentially paid to put money into the landfill rather than investing in, for instance, sorting and recycling. But that is not necessarily a bad thing. I think what we're seeing is an incredibly higher awareness of the problem throughout, and increasingly a number of countries that are packaging the waste problem within a broader circular economy agenda. One example outside of Europe that is really exciting for us is Turkey, where at very high level the government and above have launched a very important waste management plan that aims strictly at circularity. Now the question is, where do the incentives come from? Obviously there is an element of philosophy that by reducing the waste upstream, then you also solve the waste problem. But clearly this also has a competitiveness and trade dimension. What Europe is doing is creating shockwaves in its vicinity, in the neighborhood, and countries are really looking at what that will mean for the exports to Europe and the competitiveness of their business.
Yeah, and if we accept the analogy that the economy is a household or a house, and we've seen quite a few nice houses today during the presentations, we need to look at the foundations as well. And to be brutally honest, is it credible to think that we'll get to scale if we don't challenge the fundamentals of the cost and incentive structure of the economy?
Absolutely.
Question is valid for both of you, by the way.
Yeah. No, absolutely. I think if you look at the cost and incentive structure, I mean, the question of a level playing field was brought up in one of the previous sessions. We are living in a world where, even if you just look at OECD and emerging economies, governments are providing almost $180 billion a year of support through tax breaks and other incentives for fossil fuel production. If you look at consumption subsidies, the IEA estimates almost $450 billion per year of support for fossil fuel consumption. Now, let's talk about agricultural subsidies. You have $500 billion of agricultural subsidies. So all the nice examples of regenerative agriculture that we were seeing in the morning are not supported by these kinds of subsidies which are promoting intensification of agriculture and not the kinds of examples that you were seeing. So we need to correct the environment in which these innovative ideas that you've seen through the day can flourish, and removing subsidies is certainly one aspect of it. Another issue in terms of incentives is obviously we need to provide positive incentives for things that do make sense. So here, one of the things that's talked about a lot is reducing VAT for repair. And that's a very good idea because it incentivizes consumers and service providers to have these facilities where we can repair products and use them longer. Couple of complications. One is VAT is a huge source of revenue for many governments. It could be 10, 20, even 30%. So you're removing a revenue stream for the government. There are also concerns that the tax code is already too complicated and whether these exemptions could be worked out. But there's also an issue where these kinds of things could run counter to intellectual property protection. When you repair a product, at what point is it repair and at what point does it mean reconstruction of a product, creating a new product, which might be protected by intellectual property. So there are a whole range of issues once you go a little bit under the surface, which need to be thought out and ironed out, in order to even generate some of these positive incentives.
I think we agree that you need public policy, and those public policies are essentially three big buckets. Regulatory type of policies, a lot of work's being done in Europe now. Fiscal policy, changing prices, and behavioral type of communication, awareness raising policy that really are capable of shifting consumer preferences. But if you are effective in any jurisdiction, in any economy, in any country, those sort of policies, you do create competitiveness constraints for your producers. Costs go up, the cost of regulations has to be factored in, and those consumers will become less competitive. That creates leakage, creates consumers that leave your jurisdiction and end up in jurisdiction with less environmentally stringent type of norms and prices. And that should immediately translate into forms of trade protection, let's call it for what they are, but trade enabling mechanisms that allow everybody to get to the same level playing field. The problem is that certain countries will not be able to get to the level trading field. You will see leakage move to jurisdiction where there is access to capital, where the risk environment is such that investors will come in, where there's an element of R&D that is capable of copying other type of innovation in investments, but very non-diversified commodity producing countries will not be able to basically get on that level. Those will be impacted. That's why it's important when we think about the trade and the type of policies, we think about how to help these countries to get to that level. And I think companies like Nestlé or Coca-Cola or Pepsi, companies that lead big value chains, have a massive role in bringing those producers in those countries up.
What is the thing that we should get started on at country level? The OECD does a lot of policy recommendation. What would be your one measure that you would say puts us on a pathway towards transition?
Well, I hate to end by quoting Yogi Berra, but it's one of those things, if you don't know where you're going, you'll end up somewhere else. Circular economy is definitely one area where we lack methodologies, measurement, and data. So defining circularity, at least what's our direction of travel, how do we measure it, I think is a first order issue before we can even talk about putting policies in place and defining whether we are making progress or not. So that would be, if I had to pick one thing, I would start there.
Andrea?
I would say two. I'll try to be brief. The first is, we talked about design today, about design products, design circular business. We have to talk about redesigning fiscal frameworks and fiscal policies. So circular tax reform that brings up the level of taxation for raw materials that today averages between 0 and 2% for extraction and production to something higher than that, and recycling the revenue streams into lowering the taxation, the fiscal burden on labor. You end up taxing employment less, a good employment, and taxing externalities from production higher. And the second one, a public policy, is through procurement. We've been talking about circular and green procurement, sustainable procurement, nowadays circular procurement a long time. Governments have created markets for centuries. France started doing that. We need to provide those incentives. If it costs a little bit more, taxpayers in wealthy countries will shoulder the cost of the extra cost of circularity in procurement, but this is the way to incentivize business, is to create markets through also the public offers.